Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. Thanks for joining us today. I hope you are having a nice December as we gear up for New Year's just around the corner. It's a good time to be a property investor on a number of different levels. Number one is that I've jagged some of the best bargains I ever have during this period of time running up to December. It's a good time to buy a property. Less people in the marketplace, people's headspaces are elsewhere. So often, it's not always the case, there's a little bit less competition in the market right now. And I think back to one of the properties that we secured, and I've spoken about it a lot on the Smart Property Investment Show, out at Cambridge Park, which is near Penrith in New South Wales. We picked up, I think, the weekend before Christmas about 5 years ago, and we got a great buy there. And the story is all there on smartpropertyinvestment.com.au. It's at Cambridge Park. Go and check it out. It's a great story, and we talk about buying at this time of the year. But by the time you listen to this podcast, it might be too late for you, but do not worry. January has a lot of people on holidays, but you can also use that period of time to hunt out good bargains, particularly in the evolving markets of Sydney and Melbourne right now, and we've spoken at length about that. So have a look around, see what's out there. And I'm going to use that as a segue in today's chat with Alan Yeung. Alan's a property investor, and he's coming here to chat about his portfolio, but he's also a real estate agent. So I might kick off with asking him about buying property in the summer months when everyone's on holiday. Is it a good time to buy, Alan, right now?
Yeah, good morning, everyone. Yeah, it is a fantastic time to buy.
Yourself as a property investor, so I mentioned before, and you're now a real estate agent. Prior to that, you were an engineer. Is that you started buying when you were an engineer? Is that the story?
I started buying before that, before I finished uni.
Okay.
What Dad said was, being a migrant, we need to set our foot where you live, and you should buy property. Well, back then I said to him, well, I don't have a job. He said, get one. And
what was that job?
Then I got out of my rear side and just started trying to find any job that there is, any intern that I could get, an award wage job that as a field surveyor.
Okay. And that was enough to be able to get a deposit together and some bank financing to go and buy your first property?
It was in Wollstonecraft.
Okay, in Wollstonecraft as a first property. That's a pretty premium location, Wollstonecraft. Wollstonecraft as in sort of 5 kilometres from Sydney CBD?
Yeah.
What was the first property? What was it?
A 2-bedroom, a vanilla type of building. Still remember it.
And how was that buying experience? Was it quite daunting, or you were, confident going into it?
No, it actually happened 15 months after we first looked at a property. Well, okay. To all the property purchases now, the first one's always going to be hard, but you need to lose a property in Manly, you have to lose a property in Greenwich. Oh, should have bought this one, should have bought that. But then you amalgamate all that confidence up, then you go, oh, well, if I don't make a decision, I'm never going to buy one. So like my tip to people who are going into buying a property in the future, if that's a thing, set a date.
And take action.
Yeah, because you only really have a window of 4 weeks being in the same market. Another 4 weeks where the lending criteria changes. Your pre-approval changes.
That's not a bad logic behind that. So you're saying that if you are committed to buying, you get all your ducks in a line, you do the research, you know where you want to buy. Don't wait because you need to reset because the market changes, lending conditions changes, there's other changes, governments potentially change and tax legislation changes. So it's a really good point. And I think also to what you're saying, Alan, you need to embrace that journey as well. You actually need to go to a whole bunch of open homes, go to a whole bunch of auctions, put some offers in, get knocked back, because only then are you going to get the confidence to be able to make that decision when a decision needs to be made.
Definitely, because what happened afterwards in about 2-3 years after we did our first purchase, I went out to see other properties with my mates that were looking into buying a property because we want to share our journey, just something to do on a Saturday. And what happened was, I don't like this property. It doesn't have a car space. It doesn't have a balcony. Well, to me, I'm like, well, this is perfect. I mean, it's cheap to run. A smaller loan mean there's less stress for you to find the next job. Whilst we think we're going to have a better paying job tomorrow, we may not. So we put so much emphasis on how the market's going. Well, how are we as a market? How are we as a stock?
Yeah. So you've purchased property in conjunction with friends, but you've also purchased individually as well. Is that sort of pretty much the makeup of your portfolio, is it?
Yeah. So I've invested myself, and I've purchased with friends. Not always a good idea, but you wouldn't know until you do it.
And this is I guess the scar tissue I often talk about on the Smart Property Investment Show, in that you can be an armchair investor. You can sit there and you could know absolutely everything there is around a market and how to do it and why you should do it and why you shouldn't be doing it. But it's only when you get out of that armchair and get on the ground and get some experience can you actually be confident, number one, to make decisions, but number two, reflect on going back on whether those decisions were the right decisions. So, this whole mantra that you're saying is that you've got to go out there and do it. And if it's not right, you can always, if you make the right steps beforehand, you can still learn from it and keep moving forward.
Yeah, so I think the key to me purchasing and investing is because you never really stop. You don't look into buy, you look into how feasible is your portfolio. So are they performing? You keep an eye on the market, not so that you're keeping check in price every day, but you keep a general check every quarter, see how the rent's going, see how it's comparing to the rest of the market. And what happens is, you'll find certain things and you'll ask your property manager, is it going well? Why are we lagging? And we are charging a little bit too much premium. Do you want to ask the tenant if they need anything in the house? So you don't want to lose a good tenant either. And how are you fetching with your price in the investment you made? Sometimes it's good enough so that you will sell it, enable for you to buy another 3 in the future.
And why do you invest in property? What's your goal?
My goal is to have fun, pretty much.
Which is good.
Yeah, I don't play any sports. It's fun to negotiate, interrogate, and execute. I mean, you really do feel alive when you're put on the spot. Can you actually do it? Bank says you can't. Well, why? Ask them why. You would have people or professionals telling you that this is a risk, but life is a risk. Coming here, getting a park, you might get booked. If you overstayed, that's a risk. So
you enjoy working in a world with a little bit of risk. You like to, you feel confident that you can manage risk and balance risk.
Yeah. Well, if you don't push the envelope, then you're always living the same life. So you're no better than the bloke next to you.
I've asked that question, Alan, to a lot of people now, and you've given me a very philosophical answer, which I find quite intriguing, and good, by the way. A lot of people would answer that question matter-of-factly saying, I want wealth so I can retire, or, and that's reasonably conservative, where other people would be like, I want to be rich and I want to drive a Lamborghini. You've sort of seen it from a very different way, and you've taken a very philosophical approach, as in you invest in property because you actually enjoy the challenge and the dynamics of investing in property as a self-satisfaction and interest level rather than a commercial outcome. But I imagine there's also a commercial outcome that you're trying to achieve as well, or is that secondary to, just being invested and involved and giving you a sense of purpose?
Well, I'd say
Haven't thought too much about it?
No, you just do it. Like if you wake up, you go to work because you love it. You wake up, you might drive, you might walk, and circumstances change. You might have your Lamborghini today, you might not have it tomorrow. Why would it matter? What do you really need? I need my wife, I need my family, pretty much, or maybe my phone now more than ever.
Yeah. It's glued to us these days. So, and you said that you enjoy the 3 words we used was around negotiation was the first one, but also the I think you enjoy the deep diving into a property and understanding what makes it tick and the dynamics of it, which can set the price from which you can negotiate. What's your top tips for negotiating property as a property investor? And that's a bit of a loaded question because you're also a real estate agent, so you probably see both sides very well. But how do you buy the best property as a property investor, negotiation wise?
Will take time, but giving yourself a time limit as well. I don't know how that works. I mean, give yourself, so what's the best property for me today in this market? There's 22,000, 24,000 properties in metropolitan Sydney today.
For sale.
For sale, let's say. Don't quote me on the number. It's a number that I had in my mind for a long time. But 20-something thousand.
Yeah.
And what happens is, well, if I only can afford $500,000, what can I afford? Well, I prefer a house. Then find a house. It's not in the suburb that I want. Then, well, there's only 2,000 properties that is qualified for you to buy today. Unless you get some other funds from somewhere else, it's obsolete. Like it's not perform. You can't perform that that purchase unless you get another $500,000 from Phil. We go partners.
I haven't got $500,000 by the
way. To perform a purchase at $1 million.
Yeah,
that's it. And I think my top tip would be, if your pre-approval comes at $500,000 for you to purchase a property, look for properties that are in the 400s. Because keep in mind, if you like it, if it starts at $500,000 and Phil here also has $500,000 and maybe another 10 in his pocket, he will win. He will always buy that property. Yeah. And be the person that can more than afford that property, then you can always get a better deal.
So tell me about the best deal you've ever got as a property investor.
Shelby.
So that particular property was I think you said it was a house. There's only houses out, I think, in Shelby. Or maybe some units. Shelby's right near Emerton, Wayland. That's Shelby, isn't it?
Bidwell. Wilmot.
Wilmot. I know that area. Yeah, I know it quite well.
Yeah.
It's
always on TV.
It's always on TV. I know people who bought in those areas at the right time, and they've done very, very, very well securing property out there. So tell me about the Shelby property. What did you pay for it?
$302,000 back in 2000 and something to 14. I think.
Yeah, it would have been about 2014. And today, what would that be worth?
$450 if no work is done.
Yeah.
If you put another $50,000 to update the kitchen and wardrobes and whatnot, you'd get excess of $550. Okay. It would be money well spent.
Yeah, $550 sounds about right. You know, I think it's probably dropped a little bit recently. You know, that the whole of Sydney sort of, you know, softened a little, but nothing too considerable. And those on properties like that aren't softening as much as other areas with higher ticket prices. So.
Yeah, because it's important that you do see where it's affordable to the rest of the market.
Yeah.
It's actually, there's probably a little bit more resilience. The top of the market and the bottom of the market, people that can afford it, they will afford it. The premium luxury market's not going to really drop that much.
Not going to drop too much.
And then it's only really in the middle sectors.
Yeah. Have you purchased any other properties in that area, or where else have you bought?
Melbourne predominantly in the last 3 years, all because when you see a risk, there is opportunity. What's the best deal that I could get that is risk averse? Just because 90% of the properties are in a risk area, what about the other 10?
Yeah.
There's always success stories that you hear that, I bought somewhere. At that time it wasn't great, but I bought this and it was good. And because there's a big cloud about where the market is doing bad, everyone's uncertain, you're free to take as long as you want to make a decision. Because when the market's up, there's no time for you to do it. You look at the property, you go in, you even speak with the real estate agent. When you go to the actual open home, sorry, it's sold this morning.
It happens a lot, doesn't it?
Yeah, more times than you think, because everyone is confident, everyone is trigger happy.
So what's the future for you then? Are you still buying property at the moment, or are you in a period of having a bit of a break?
No, you never really stop, like I said. Like then you find a good one, then you buy it. You find a way to buy it.
So you're not stopping then? You're buying in which market are you buying at the moment?
Mostly in Melbourne, pretty much.
Okay.
Because we do see a huge amount of population growth in Melbourne, more than Sydney, and their wages is pretty much the same as we are. So the affordability is quite better than what we have here.
Yeah.
Though in the last 2 years, their housing prices have actually gone up a lot. Housing as in detachable housing. And we know from as a fact in the country that I'm from, in China, in Hong Kong, and in Sydney in the last 15 years, what would have happened? When property goes up to $1 million, it doesn't stop. It very quickly went to 2 million as a median price.
In Hong Kong?
No, in Sydney.
Okay. Yeah.
So it's also done that in Melbourne as well. So it does have that residual effect. And apartment living style is now ingrained in the younger generation. So they have their own Richmond, Collingwood, Fitzroy, Carlton. Their inner east is like our inner west.
Yeah.
And then their inner west is starting to become inner west, of us as well.
Nice one. That's really interesting, Alan. I really enjoy the chat. I like your philosophical way of looking at property. I think a lot of people often overcomplicate property investment through being so rigorous on the numbers that they often forget about a lot of the satisfaction that people get out of buying a property. It is a challenge, and it's good to be good at what you do. And I think you quite enjoy the idea that you can skew property better than most and get good bargains. So, I've really enjoyed the chat.
Thank you so much.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily newsletter, so you're the first to know what's happening in property and property investment, smartpropertyinvestment.com.au/subscribe. Also right across social media, just search Smart Property HQ. And if you like the podcast, just press the subscribe button wherever you're listening to it right now, and make sure that you're getting every new episode as they come online. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.